we're doing welcome to the application video to the swing versus internal structure. Now this is going to be a really important video to understand the difference between swing structure versus internal structure. So we explained the theory behind it. Now what we've got to understand and the way that we use the charts is we have swing structures across multiple time frames, and then we use these time frames to understand swing structures. We have these higher time frame structures that are made up of these lower time frame structures, and we use time frames to understand these swing structures. Now the swing structure is what determines your overall direction of that given time frame. So if we look at this trade now, or we look at this chart, we understand the most recent break of swing structure is this break of structure to the downside right here. How do we understand that? Because if we look, we have a higher high in the market before a higher low. We had a new higher high before a higher low, a higher high. That's now led to a bearish break of structure. So we can understand now that this is our swing low within the market. This is currently, when we have bearish market structure, what do we know? We have weak lows and strong highs within the market. Okay, so this is currently our weak lower low, our target that we expect to get ran. Let me just bring price back a little bit. Okay, and we understand that what do we know when price is bearish? We understand that when we've got a weak low, what else do we have? We have a protected high within the market. So when we look at price action right now, and when price is bearish, we understand that when price is in a bearish market and we have protected highs and weak lows, we expect to see a new lower high in the market before a new lower low. Now the difference between swing structure and internal structure is when we're looking at this just on the 15-minute time frame, our swing structure is from this point here to this point right here. This is our swing structure, okay? Because this overall is this was the last swing low. We got a break of structure of that swing low, and this is our swing high now to swing low. So everything now that happens within this range between the protected high here and the weak low is what we call the complex pullback, because overall, following a bearish break of structure, we know that we currently have bearish market structure. So we expect to see a new lower high within the market before a new lower low. And swing structure determines and tells you what your given bias is for that time frame. So we know currently, following this break of structure right here, we know that we are bearish within the market. So we expect to see a new lower high in the market before a new lower low. But if we play price on and we look at this most recent price action right here and we let it play out, we can see we get price play out, but then what do we get, right? Price here now, if we look at this internal structure, we can see here that we seem to have put in a higher high, a higher low, and a higher high. And what this is what we call an internal break of structure, okay? Which I had to know with an IBOS. So the reason and the difference between swing structure and internal structure, when we look at our swing structure, we understand this is our lower high, this is our lower low. We expect to see a new lower high in the market before a new lower low. That is our sort of bias and understanding following structure. When we're bearish, we understand we want to see a new lower high in the market before a new lower low. So just because we've had this bullish break of structure doesn't mean that we are now bullish, because we are overall within a bearish swing structure. So we know swing structure gives you your direction for the trade, or the direction of structure, okay? Because we understand that we're looking for a new lower high in the market before a new lower low. So all internal structure, all internal bosses they basically create these complex pullbacks of your swing structure. So they do not give you your overall direction. But what these internal breaks of structures are, all these are breaks of structures on a lower time frame. So we understand currently that this is the 15-minute swing structure. So if I was to go to a lower time frame, what this 15-minute internal structure will be sort of 5-minute swing structure. So when we start seeing internal bullish structure, okay, but we understand overall on the 15-minute we still have bearish overall swing structure, this internal bullish break of structure is simply playing a complex pullback of the overall bearish swing structure, which if we were to use a 5-minute time frame, we could probably see it's not actually that clean, to be honest. You could see here that we've had a switch in order flow here. Okay, so you can see like lower high, lower low, higher high, higher low, higher high. So now when we're looking at this on the 15-minute, we understand now that even though we're getting this bullish structure currently, we need to understand the swing structures that we're in. Because if we look at currently what we've got this protected high and this weak low. We expect to see a new lower high in the market before a new lower low. That is our swing structure. So all this internal structure doesn't change the direction of the trade, because think, overall we're looking for a new lower high in the market before a new lower low. Internal breaks of structures are lower time frame swing structure. So if you're reading this right now, you can say, okay, we understand that we're bearish, we have a protected high and a weak low. We understand that following bearish market structure, we understand that we should expect to see a new lower low within the market, right? But we're getting bullish structure currently, but they've got to understand that this internal structure is within bearish swing structure. This doesn't determine the overall direction of where price is going, because we understand that overall the swing structure is bearish. This low is weak, so we expect to see this low overall get ran. So this, now we can see here we had a new internal breaker structure, and we can see now what have we had? We've now had a bearish breaker structure. Okay, this is our internal structure here. Okay, but now what can we understand here? Now this is where the use of multi-time frame analysis will come in, which will go in a later video, but understand this for now. Now internal structure, which we know is structure on a lower time frame, is in line with swing structure. So we know obviously breaker structure, lower high, lower low. We know we're looking for a lower high before a lower low. We can potentially see if we mitigate the right levels, that'll make sense if you want to note that down, but that'll make sense when we come into it later on. We understand that if we hit a level that makes sense, and then we get now internal structure realign with external structure, this can start to give us structural alignment to say, okay, we could now start to see this get ran, because we know now that we knew if bullish structure was to remain, okay, and it was going to continue to come on and take out this high, then this bullish market structure should hold and continue. But now we've had a breaker structure internally bearish in line with the swing structure, so this has given us that indication now that we can now potentially see this low get ran, because we have what's called structural alignment. Again, this will make sense when we go into multi-time frame analysis, but it's very likely, there we go, that we start to see this low get ran, because we had internal structure realign with external structure. So now what can we see that we can understand from other videos? We've had a breaker structure. Okay, now we understand once again that this was the swing high, was the swing low. This was all internal structure, and these were all internal breaks of structures because they were contained within two bearish swing points. This lower high, lower low, we understand we were looking to get a new lower high before a new lower low. Okay, so now we've had a break of structure now, because this was the swing low, we've had a break of swing structure now. Okay, so we understand that the new swing high in a bearish market is the highest point that's led to the breaker structure. Okay, so we can understand and denote that this is now our protected high within the market. Okay, we understand that this is no longer the protected high. So what we do is we wait for the pullback, okay, and that's what we can see here, right? So we can see here now that we've had a weak low and a protected high within the market. Okay, this is currently our swing high, and this is our swing low. Okay, so if we were to, so we'll just draw that on here so you can see swing lower high, and this is the swing lower low. We understand that when we're in bearish market structure, the lower highs are protected, so this shouldn't get ran, and we understand that the lower lows should never get broken. So what do we expect to see in the market? A new lower high before a new lower low. So we understand that that is the swing structure. So anything that happens within here is this is internal structure, because these are our swing points, right? The internal structure does not change the direction of this time frame, because we know, just looking at these swing points alone, that we expect to see a new lower high in the market before a new lower low. So if we start getting bullish breaks of structures within swing structure, this is what we'd call substructure. We're not going to go into that too much yet in detail. We don't want to go into minor breaks versus sub breaks just yet. Just understand the difference between the swing structure and the internal structure. Understanding that following this break of this swing low, leaves behind the new swing high, which is the highest point that leads to the break. And then once we get the pullback, we're now looking to put in a new lower high before a new lower low, with the weak low and the protected high that we don't expect to get ran. And anything within these swing points is what we understand is called internal structure. So we can see here once again, we can see that price is now putting in what we call a complex pullback. Okay, and we can see here now, if we understand our fail to closes, we can see that if you look here, we had this low, this high, we had this FTC, which is a fail to close. Okay, and then once again, this now confirmed we have a new break, but this is called internal structural break. This does not mean we are bullish, because we understand that overall we are still contained within bearish swing structure. This is our swing high, this is our swing low, this is protected, this is weak. We do not expect this to get ran. So just because we're getting bullish structure here, we understand that this is playing what we call a complex pullback of the overall bearish swing structure. We expect to see a new lower low in the market, sorry, a new lower high before a new lower low. So what could suggest that we might be getting we could then start to come and see this new low get run, or we could potentially start to see internal structure turn in the same direction as the swing structure. So if I now understand that we understand it's the lowest point that's led to the high. Okay, so currently for a true internal break, we'd want to see that low go, but let's just see what happens. So yeah, and again, what happens? We go ahead and we take the low, and once again, this hasn't broken through yet with the candle body, so we'll just wait for price to do what it needs to do. We need to see this low. Now we understand that this is currently a fail to break, because it hasn't broken through with the candle body. We're going to keep it simple for now. And we know that this is currently now the new swing low, but this is still the swing high, because this currently, because we understand, right, that is the highest point that's led to the break, okay? But this has failed, this high has failed to take the swing low out with a candle body. So we understand currently that this is still not a protected lower high in the market, and this is essentially still a weak high until swing structure breaks. So this is still a weak high until we see a new break to the downside. But we understand that now we need to see a break of this low to confirm our new lower high in the market. So we wait to see what happens next, and eventually we do get the break. Right, there we go. So we've had a new breaker structure now. Right, okay, so we've had a breaker structure here now. Okay, and then what we've got here now is, if you just play that out a little bit more, there you go. Right, so what we've got here now, when we look at this, is we now have, originally this was the fail to close, but this is still the lower high, because this was the highest point that's led to the overall breaker structure. So we understand now that this is currently, this is not the swing high protected high anymore. This is our new protected high within the market. Okay, this is our new protected high within the market. Right, okay, so I wanted to make sure I was showing enough and good examples, so I've just gone now and moved on to a different example here, and all we're going to do again is show exactly the same thing, okay, internal structure versus swing structure. So if we just have a look here now, we understand that we have this lower low, a lower high, a lower low that's led, and we've had a new high put in the market, okay. We've had a new breaker structure to the top side right here, okay, and we understand this is our current swing structure, right? We know that this is our protected high low in the market, okay, because this is the low that's led to the high. This is our protected low. We understand that when price is in a bullish trend, that this low should not get broken now. We're bullish, so let's see what happens. We start to get the pullback once again, okay? So now we understand that this is our target. We understand that we expect to see a new higher low in the market before a new higher high. This is our swing structure. We can again draw just a range thing here just to see that this is the swing high, this is the swing low. Everything that happens internally within here is all internal structure, because overall our bias and understanding and swing structure on this specific time frame tells us we should put in a new higher low in the market before a new higher high. So we know that this is our swing structure, and swing structure currently on this time frame is bullish. We expect to see a higher low in the market before a higher high. So anything internally here is classed as swing structure. Okay, so we can see here now that this came to a fail to break right here. Okay, sorry, a fail to close. Okay, this is an FTC, and then we can see here that this now was the full break of structure right here, but it goes from the lowest point that's led to the break which is this one right here, which we can denote and see. This is now the new protected low within the market. This is our swing low. We are still bullish, and everything that happens internally is all internal structure. We expect to see new higher highs in the market whilst the lows never get broken. So we can draw now, we can see we've had a higher high, a higher low, a higher high. This is currently our target. Okay, we can see that this is currently our target, and this is currently our protected low. So the break of structure and swing structure is going to be when either this protected low gets broken or this this weak higher high. We understand that when price is bullish, we expect to see a new higher low in the market before a new higher high. So that is what we expect. But any breaks of structures that happen internally here do not change the overall direction of swing structure on this specific time frame. We expect to see, as we know, on this specific time frame, a new higher low in the market before a higher high, and that is the expectation. So any breaks of structures that happen within the swing structure is all internal structure and does not change the overall direction of the swing structure. But this is all internal, but what we know is that what internal structure is lower time frame swing structure, and this will make more understanding and sense if you write that down when we come to multi-time frame analysis. That's where it will make the most sense. So if we just continue to draw out now, we can see here that we've had now an internal break of structure. We can see we had this low, okay, and this is now an internal break of structure, okay. This is not a break of swing structure because we know we are contained within a bullish swing structure because this was the higher high, higher low, higher high. So the break of structure is where you break swing structure. This is just internal structure. This does not mean now that we are bearish within swing structure. We need swing structure to break to change our overall direction of true structure. So we know right now, and if we look again, what have we got? We had, this was obviously a high that led to this low, okay, but like internally again, you could say we've had like, you know, a break, we had another break of some form of high. So we can see we have bearish structure, we've broken bullish. This again is what we'd call internal structure, okay? It's an internal break, but we understand that we are still contained within a bullish swing structure, okay? We know we're expecting a new higher low in the market before a new higher high. So once we understand now that we've had an internal break of structure bullish in line with our swing structure bullish, this could now say, okay, we could potentially see this high get run. Obviously, when we come to it, we'll use multi-time frame analysis to truly understand if we have, because we don't know until we use multi-time frame analysis. But when you understand just from looking at it, if you had an internal break of structure in the same direction as your swing structure, this could potentially give you the indication now you're going to come and take out the weak high or low within that swing structure, which you can see is what's happened right here. Once again, we've now had a break of swing structure, okay? Break of structure with a boss, not an internal one, because this was the swing high, okay? We understand now we've got a new protected swing low in the market. This was the higher high, that's higher low, a new higher high in the market, okay? This is no longer our protected low, okay? And we'll remove the new range tool. This is our new protected higher low within the market. We understand that when we're bullish, we have protected lows, and then we have weak highs, okay? We let price play up a little bit, but you can see we started to pull back. So now we've got a weak high in the market before we've got a weak high, we've got a strong low within the market. We understand now that again, this is our swing structure. We are bullish on this specific time frame. So no matter what breaks we get within this range on the internal structure, the direction of this specific time frame is bullish. We are bullish on the 15-minute. This is our swing high. This is our swing low. Currently, the high is weak, and we have an expectation just from this time frame that we expect to see a new higher low in the market before a higher high, and this low should not get broken because it's the lowest point that's led to the break of structure, and that's the swing structure, and anything that happens within here is all internal structure. So let's just play it out. See, so you can see here now, you know, again, whether you want to call this a break of structure because obviously it hasn't broken through the candle body. We can see here now, this is what we call a complex pullback. Okay, you can see here now we've had a true break here of a low, and this is a internal break of structure. This is not swing structure, okay? Even though we've had an internal break. This is obviously bearish. Let's just say obviously it is a breaker structure. It would be a fail to close, and then that would be your break, but we'll just have that there for now and understand that we are still bullish on this specific time frame. Okay, this is our swing high, this is our swing low. Okay, we expect a new higher low in the market before a new higher high. So what this internal structural break means is we are not bearish, so we don't assume that we're going to see a new lower high in the market, sorry, a new lower low, because the expectation when we're in bullish market structure is to see a new higher low before a higher high. So we know that once we potentially get maybe a break of swing structure internally, so we can see here this was the high that's led to this low. So if we potentially break above this high right here, as this is the internal swing structure, if we get an internal swing structure break in line with the swing structure break, this is sort of giving us that indication that we could be getting this structural alignment, and you can confirm it with multi-time frame analysis to understand that if that's the case. So we like to see what price happens here now, and then obviously we can see here we get sort of minor internal breaks here, but understanding that price is still bullish within swing. This is all internal structure. These breaks of structures, these bearish breaks of structures currently are playing the complex pullback of the overall bullish swing structure. So that if you're getting involved in these trades here, such as these say you were trying to short these down, you understand that if you're shorting, okay, and take short means that you're selling, you understand that you're still contained within bullish swing structure. We expect to see a new higher low in the market before a new higher high, and you can't assume that anything else is going to happen, because you need to basically assume that the expectation of the swing structure being bullish will play out, which is the higher low before a higher high. So let's just play that out now and see what happens. And we can see now we've had a bearish breaker structure now. Okay, we've had a breaker structure to the downside. We've had a break of swing structure now. The swing low is gone. Okay, which means now that we have got a new protected lower high in the market. Okay, it's the buy before the sell. Okay, so this is our swing high now. This is our, well, we wait to see for the pullback. Okay, that's going a little bit complicating. We're just going to call this currently temporarily. This is still our weak low as it stands. Okay, this is our weak low, and this is our protected high. We're currently bearish, okay, from this swing point to this swing point. This is our swing structure. Okay, we are bearish. The expectation of this, from this swing high to this swing low, is we expect to see a new lower high in the market before a new lower low. That is what we expect to see, and we don't assume anything otherwise. So if we have a look at what we've got here, this broke this low and this high. These are called change of characters. We'll explain it in a later video, but let's just say now we've had, this is a break of a high, but this is internal structure once again, because this is within the overall swing structure. The swing structure being the protected areas on the charts. This is the protected high and the weak low. We are currently bearish. The expectation of bearish structure is a new lower high before a new lower low. When we have bullish internal structure playing within bearish swing structure, and for this example, this is telling us that we are simply pulling back, pulling in this complex pullback to overall potentially come and put in a new lower high before a new lower low. So let's just see what happens next. If we get any more, and you can see here now, we eventually then, what did we get? Again, we got an internal break. This is a change of character, but it'll make sense in the next videos that we go into. But you can see here now that this was an internal break of structure. We'll just call it an internal break of structure for now, because this was a break of a low that was within swing structure. Okay, it was not swing structure, and now this low being taken, okay, is now the swing structural break. Okay, and now this has left behind a new protected high in the market, because this is the high that's led to the low. That's given us the breaker structure. So this is no longer the swing points. This is no longer the protected high. And we know now that this is the new protected high within the market, okay, which then leaves behind a weak low within the market when price wants to pull back. There you go. One more time, that will draw this on. This is the weak low. Okay, we understand that this is swing structure. We're bearish within swing structure in this example from this high to this low. Okay, we are currently bearish, and we have an expectation for a lower high before a new lower low. Okay, we understand that anything that happens within this is all internal structure and is a complex pullback And any bullish market structure within this is simply a complex pullback to overall put in the expectation to come and put in a new lower low in the market before a new lower high. So any bullish breaks, it's all within internal structure. So we can see here now that this would be an internal structural break. Okay, this is a really nice example, because you might be looking at this and saying, oh, price is bullish, price is really aggressively pushing to the upside. I expect this now, this is going to moon. But what you've got to understand is currently we are still within bearish swing structure. This is a protected lower high. We do not expect this high to get run, and this low is weak, and we never assume it's going to do anything otherwise. Only until this lower high gets violated does that confirm that we've had a change in trend and we've gone from bearish to bullish. So if I play price out now, see what happens. We can see here now that it's respected, and we can see here now all of this, any of these lows, such as this here, this is all internal structure. If you want to call this an internal break, I understand that this is the low that led to this high. So in theory, if this low goes now, because this is the internal swing, okay, because you can see this is the low that's led to this high. Okay, if this low goes, this now gives us alignment and true confirmation that price now could, in theory, come and take the week low. Okay, play price on. There you go. You've had a break. So in theory now, that you can see the lower high got broken. Sorry, the lower high never got broken. We've now internally had a break, bearish, in line with the external. So this is where the trade ideas can come in and say, we understand now that our internal structure and our swing structure are both aligned with each other. We could now potentially come and see the weak low now come and get ram, which we get there. So, and then once again, I'm not going to do it again, but we know now that is now a break of swing structure, which leaves behind now a new protected lower high within the market, which is the highest point that's led to the break. Okay. And again, we always expect now to see a new lower high before a new lower low. And anything that happens within them swing structures is what we call internal structures. So I hope that made sense. Now what we're going to do is move on to the next section.